When a market crashes, most people panic. They open their phones, check their portfolios, and watch the red numbers bleed across the screen. Some sell everything, thinking they're escaping the pain. Others freeze, hoping the losses will somehow stop. But Warren Buffett doesn't panic. He never has. For over 60 years, Buffett has watched markets collapse, recover, and collapse again. And every single time, he's done one thing that separates him from almost everyone else. He stays calm. He thinks, and then he acts with discipline when everyone else acts with fear. He once said, "You don't find out who's been swimming naked until the tide goes out." That's his way of saying, a crash reveals who was prepared and who was pretending. So here's the question. When the next crash comes, will you know what to do? Because it will come, maybe next month, maybe next year, but always comes. In this video, I'll walk you through Buffett's exact approach. The mindset he uses when the world is panicking. Not fancy theories, not Wall Street jargon, just simple, proven steps from a man who's made billions by staying calm when others couldn't. If you've ever felt the fear of watching your investments fall, if you've ever wondered what Buffett sees that the rest of us miss, stay with me, because in the next few minutes, you'll learn how to survive a stock market crash. The Warren Buffett way. When a market crashes, Warren Buffett doesn't reach for his phone. He doesn't check stock prices every minute. He doesn't call his broker or stare at the headlines. He does something most investors find almost impossible. He waits. Buffett understands that panic is the real danger, not the crash itself. Because when fear spreads, logic disappears. Investors stop seeing businesses, they just see numbers falling. But Buffett reminds us, behind every ticker symbol is a real company with people, products, and long-term value. Prices move fast. Value doesn't. His guiding principle is simple. Be fearful when others are greedy, and greedy when others are fearful. That isn't about taking wild risks. It's about staying calm enough to recognize opportunity in chaos. When everyone else sees danger, Buffett looks for discounts. When others predict the end, he quietly buys the future. He once said that he doesn't try to predict where the market will go tomorrow, because no one can. Instead, he focuses on what will still matter 10 years from now. That mindset, long-term, unemotional, grounded, is what turns every crash into a test, not a tragedy. To Buffett, a crash isn't a signal to run. It's a signal to think, to look for value, to act only when the odds are on your side. Because the truth is, you don't survive a market crash by being the smartest. You survive by being the calmest. And that's what separates Warren Buffett from everyone else when the markets fall apart. During a market crash, that mindset becomes everything. Most people think survival means timing the bottom or guessing the rebound. Buffett knows it's something else. It's about protecting your capital and keeping enough liquidity to stay in the game. He often compares cash to oxygen. You don't notice how vital it is until it's gone. When markets collapse, the investors with no cash are the first to panic because they have no room to breathe. They sell good assets just to raise money, locking in losses they can never recover from. Buffett avoids that trap by always holding a cushion, billions in cash reserves. Not because he's afraid, but because he wants to be ready. Crashes create chaos, and chaos creates opportunity. You can't buy when others are panicking if you're broke when it happens. Liquidity is what gives Buffett freedom when everyone else feels trapped. It's the difference between forced decisions and strategic ones. When fear hits the market, he isn't reacting. He's waiting patiently, knowing prices will eventually fall below their real worth. That's when he acts. Protecting capital isn't just about avoiding loss. It's about positioning yourself to win when others can't. And in every crash he's lived through, Buffett's patience, cash reserves, and discipline have done more than keep him safe. They made him stronger. Because in his world, surviving the storm isn't luck, it's preparation. When a market crashes, most investors stop seeing businesses. They see tickers, red, falling, frightening. They forget that behind every symbol is something real. A company with products, workers, customers, and value that doesn't vanish overnight. Warren Buffett never forgets that. He doesn't buy stocks. He buys businesses. He once said, "When I buy a stock, I think of it as if I'm buying the whole company." That mindset changes everything. During crashes, cheap stocks appear everywhere. But cheap isn't the same as valuable. Buffett looks for quality. Companies with solid profits, honest leadership, and products that people will still want 10 years from now. He calls this a moat, a durable advantage that protects a business from competitors and time. Think of his favorites: Coca-Cola, American Express, Apple. Each was purchased when others doubted them, when the market was uncertain. He didn't buy because they were trending. He bought because their value was clear, even when prices fell. Buffett reminds investors, if you wouldn't be happy owning it for 10 years, don't buy it for 10 minutes. That's the heart of his philosophy. He focuses on what a company does, not what the market thinks about it today. So when fear spreads, he studies. He reads. He waits, and when a great company goes on sale, he acts. To Buffett, a falling market isn't a signal to flee. It's an invitation to buy great businesses at a discount. Because in the long run, prices recover, quality endures, and patience always wins. When a market crashes, the noise becomes deafening. Every headline screams disaster. Every news anchor predicts collapse. Every friend suddenly becomes an expert. But Warren Buffett doesn't listen. He's never guided by the crowd, only by his own reasoning. He once said, "If you can't control your emotions, you can't control your money." And that's exactly what the noise attacks: your emotions. Buffett knows that markets are driven by two forces: fear and greed. When fear dominates, the noise multiplies. It tells you to sell, to run, to protect yourself. But Buffett does the opposite. He turns off the television, ignores forecasts, and focuses on what's real, the long-term value of his investments. He doesn't try to predict the bottom or the top. He accepts that no one knows where the market will go next. So instead of reacting to every dip or headline, he studies businesses, not trends. He reads annual reports, not news alerts. The difference between Buffett and most investors isn't intelligence, it's silence. He stays calm enough to think clearly when everyone else is shouting. The noise feeds on attention, and attention feeds on fear. Buffett's secret is learning to tune it out completely. Because the moment you stop reacting, you start thinking. And when you start thinking, you see opportunities others can't. Every crash brings chaos. But the ones who survive are those who stay focused. The ones who know that headlines fade, fear fades, but value always remains. That's why Buffett listens to one voice above all others, his own. Warren Buffett's greatest weapon isn't timing, it's time. He doesn't chase quick profits or panic over short-term losses. He plays a longer game, thinking in decades, not days. He knows that markets move in cycles, but good businesses grow through them. Every crash, every recovery, every record high is just another turn in a long journey. And the secret to winning that journey is simple. Stay invested long enough to let compounding do its work. Buffett calls it the snowball effect. Each year adds another layer of growth. Small, steady, unstoppable. That only happens when you give your investments time to roll. Most people lose money not because they chose bad companies, but because they couldn't stay patient when the market turned against them. They sold their future for short-term comfort. Buffett never does. He reminds us that wealth is built quietly in the background, while everyone else is reacting to the noise. A crash doesn't break a long-term investor, it tests them. And the ones who pass are those who remember. You don't need perfect timing to win. You just need time. Warren Buffett has lived through every major market crash of the last 60 years. The 1973 to 74 recession, the dot-com bubble, the 2008 financial crisis. Each time, he followed the same principles. Stay calm, protect capital, and look for value. During the 1973 to 74 crash, he bought shares in the Washington Post at a discount. In 2008, he invested in companies like Goldman Sachs and Bank of America when everyone else was running for the exits. What's the lesson? Crashes reveal who prepared and who panicked. They test patience, discipline, and the ability to see opportunity instead of fear. Buffett doesn't pretend to predict crises. He knows they're inevitable. Instead, he prepares for them mentally and financially, then acts when the moment is right. Every crash could have been disastrous. For him, they became advantage. Because while others panic, Buffett remembers the long game. Value endures, markets recover, and patience always pays. And that's the mindset he wants every investor to adopt. Not to fear crashes, but to understand them, survive them, and sometimes even benefit from them. When a market panics, it's easy to forget what really matters. Warren Buffett keeps it simple, a checklist that guides every decision. First, protect your capital. Never risk what you can't afford to lose. Cash is your lifeline during uncertainty. Second, invest in quality businesses. Focus on companies with strong fundamentals, durable advantages, and proven management. Ignore hype and trends. Buy value, not popularity. Third, ignore the noise. Turn off the headlines, avoid speculation, and don't react to every market twitch. Let logic guide you, not fear. Fourth, think long-term. Markets fluctuate. Businesses grow. Patience compounds wealth far more than timing ever could. Finally, see opportunity in chaos. Crashes are frightening, yes, but they also create the rarest of chances to buy great companies at a discount. Buffett's checklist isn't complicated. It's not about predicting the next crash or finding the perfect stock. It's about discipline, patience, and calm. Follow it, and you don't just survive a market crash. You learn to navigate it with confidence. Because in investing, the real advantage belongs to those who can stay steady when everyone else is shaken. If you've learned something from Warren Buffett's approach, take a moment to pause before the next market move. Investing isn't about panic. It's about discipline, patience, and understanding value. Apply these rules, stay calm, and let time work in your favor. If this video helped you see the market differently, like, subscribe, and share with someone who might be stressed about their investments. Comment below with your thoughts or questions. I read everyone. Remember, surviving a crash isn't luck, it's preparation, and it starts with you today.